What is up, YouTube? It has been a minute since I've made a video for you guys, and so I figured I'd get back on here, start doing the trade recaps again on YouTube. I've been doing it with my mentorship as of lately, so this video is for anyone who still follows me here on YouTube and for my students. So the market is back to almost normal. Last week was terrible. It was probably the hardest price action I have ever traded in my entire career, but it was a good learning experience. And if you're learning in this market, my hat's off to you because it is extremely difficult. So for today, I came in with a bullish bias. And the reason why, if you notice here on the chart, I currently have it on the 4-hour time frame. And you can see we're delivering out of this 4-hour fair value gap and we're heading on higher. Now it seems like the draw on liquidity is going to be this 558.50. And the reason why I came in with that very strong bullish bias was here in the pre-market, I marked out this 15-minute fair value gap as well as a 1-hour fair value gap that we had right here. If you look at the structure overall of price, it came to create this low, which I believe swept something previously, it looked like. And then it came to create this high, this higher low, higher high, higher low, higher high, higher low, and then obviously it was going to continue to push on higher. So because the order flow was bullish here on the hourly time frame, we can see that we're disrespecting bearish fair value gaps and respecting bullish ones. So that shows that we want to continue trading on higher. And so this pullback that we had in the morning was nothing more than just a retracement. If we take the low from this swing low here to the high and we pull out the Fibonacci, we see here that we retrace back into the OTE area. We bounced off of this 1-hour fair value gap right here, as well as mitigated these two 1-hour fair value gaps. But notice none of them got invalidated. There was no reason for you to be short today at any point in the market because the market continued to respect all of these bullish fair value gaps, which showed that price wanted to continue moving higher. So as you can see here, we had this 15-minute fair value gap that was in discount. We bounced off of that. So coming into the first macro, I obviously had a bullish bias. So here on the 1-minute chart, if we go back to the first macro of the day, which is the 950 macro here, and as you can see, there's no bearish fair value gap that was created. So there was no entry according to my model, which is the creation of a bearish fair value gap inside the macro that aligns with your higher time frame order flow and narrative. And so as you can see here, we just had a massive bullish fair value gap get created and price just continues pushing on higher. So now coming into the second macro of the New York AM session at 1050, I still had that bullish bias. I know a lot of people love to short when we're pushing up higher like this. And that is the wrong mindset to have. I know you see people getting these insane RR trades, but you're trading against the trend, and that's not going to be a strategy that's going to hold in the long run. So what you want to look for is a trade setup that you find repeatable again and again that will show up in the market every single day that aligns with that higher time frame narrative. If you omit the higher time frames, then you're trading blind. There's really no point in trying to find these moves on the lower time frame if you have no context as to what's going on the higher time frame. And all of these things I teach in my mentorship that's actually starting next week. So if you guys want to sign up for that, the link is in the bio below. But anyway, in this 1050 macro, you can see that we create these two bearish fair value gaps, one right here and one right here. As soon as this 1-minute candle invalidates that, I'm in on longs because I know that at this point the tide is turning and we want to continue moving on higher. So what is my draw on liquidity for the day? It's that 443.75 level that I marked out. And what was that? It was the fill of this 15-minute fair value gap that we had from back on Wednesday, May 21st. So price likes to fill these fair value gaps, sometimes not close through them, but fill them. And we are bullish, so it is obvious that we're trying to trend higher and start to mitigate these imbalances that we have left behind. So that was my target for today. As you can see, the trade worked out very well. So the way I get in is I get in at the market order. As soon as that imbalance becomes invalidated, being a bearish fair value gap, then turns into a bullish inversion fair value gap. And so I market ordered in, put my stop below the swing low, and my target was the high of day. Now I did take off some of it right here. I did take it off at the high of day. and then I moved my stop up aggressively. So I have been conservative lately because of how the market was last week. So I moved my stop up into profit at this level right here, thinking that we were going to hold this bullish fair value gap. As you can see, I come, get stopped out, and then it continues to move on higher. Now, if you wanted to continue trading in that trend, same thing, a bearish fair value gap gets created right here. Pretty small in my opinion, but still worth taking because the market is very bullish. Here is another 1 to 2 setup, right? 1 to 2 risk to reward. This one was a 1 to 2 risk to reward. And if you were targeting that 443 level, you can see that this actually ended up being a 1 to 5.68. So my runners were trying to hit that level, but I got stopped out. And seeing as to how the market was last week, I didn't want to stick around for too long. Now here in the New York PM session, was there another setup that was valid? Yes. Again, if the market is bullish, why are you trying to short it? So again, we have a 1 minute bearish fair value gap that gets created right here. As you can see, that gets invalidated. Put your stop below the latest swing low right there, and you target a 1 to 2. Very easy, right? Very easy. And then of course in the PM session, we get a very nice retracement into the last hour, right? That's the last hour macro. What do we get? Another bearish fair value gap. And I can tell you right now, so many people tried shorting this, and that's just not the way I trade, because every time I try to time the top, I get messed up, right? I always end up getting stopped out. Again, target a 1 to 2, and perfect. Right there. Taps you right at the close. Right at the close, you're out for a 1 to 2 risk to reward. So today, there were 1, 2, 3, 4 good setups that occurred in the market according to the model that I teach. Now, I did go through it very quickly. Like I said, I do teach this to everyone who joins the mentorship. It is not live trading, it is not signals, it is actual teaching. So I teach you guys everything that I know from A to Z. If you know very little in trading to you kind of have some experience, feel free to sign up or DM me on Instagram or TikTok if you guys have any questions. Hopefully you guys ended up green today. I fortunately did, but unfortunately my runners got stopped out. But it is what it is. We live to trade another day. And so yeah, I hope you guys have a great night, and we'll be back at it for the rest of the week. Peace.